Hi, Warriors. Thanksgiving week. Who's thankful and for what? Hello,
I'm thankful for
Alexander,
you, Coach.
Jordan, and Kman. I'm thankful that Ryan is feeling better.
I'm thankful for that as well, Dale. Thank you very much.
Glad,
We
glad
all
to
are.
have, yeah, glad to have you back, man.
Thanks, mate.
So, pretty quick recovery, actually.
Yeah, quite
All right.
touch wood. Yeah.
Yeah. Okay. Touch wood. So the dollar is touching wood. A lot of important moving averages, Ryan. It's got a hold here the way it looks to me. And so here's a daily 200 day. And I talked about this last week, and then the weekly 50 week coming in right there. Will it or won't it?
Will it or won't it? Good question. Well, I don't know. If dollar yen keeps going, it might not.
Okay.
That seems to be the main driver at the moment of the dollar blitz. The others, cable, euro, dollar, all just hanging about their highs. But yeah, it's been dollar yen that's done all the damage there. We just
Okay.
nearly nibbled 148 not too long ago.
He's trying along at 48.
I'm not trying along. No, I'm not ready to lose any fingers at this point.
Okay. Understand. I took a short in the S&P. I just want to see if the Bears feast on Thanksgiving. And it really hasn't made a lot of progress above 78.6. And I remember Nicola Duke used to say how much S&P's liked 78.6 back. So here we are. Give it a shot. Risking 30 handles here. And
Good risk reward trade, mate.
yeah, try it. You really should risk 4,600, but I'm not willing to. Also, we're getting a little bit of a sell-off in silver. I think this is going to be a great break to buy. Same with gold. So we'll see what happens there. Aussie outperforming, and I think even if the dollar does pull back, it does rally. And if it holds here, I'm not looking for a lot. I think it peaked. So if we had got a rally back towards 105, 105 and a half, I'd be selling dollars. So that's my view going into, year end, looking for one more rally in the dollar. So I know you were out, but I guarantee you probably took a look at things. What are you thinking for this week, Ryan? I don't think we have a lot of data.
No, we've got the start of the PMIs. We've got consumer confidence, US consumer confidence on Wednesday, I think, the conference board one. So that'll be a big number, I think. But we've got some durable goods, bits and bobs. But the PMIs start on Thursday and into the Friday for the US. So that's going to be get the ball rolling on what's happening in manufacturing and services. So a bit of data to come. But yeah, we've got more bond auctions this week, 20 years coming up tonight, I think. So yeah, there's going to be plenty to get our teeth stuck into and see if this dollar slump continues.
So the 10-year seems to be maybe a little concerned about supply. It's up 3 bips, and it diverged pretty good down here. I think we could rally at least back to 470. Correct this recent decline before there's another leg to the upside. Maybe that's what's going to drive it later on. I actually know some guys that think that if it holds this, 430 level, that we could actually make new highs in yields. Do you think the guy needs to be stabilized?
At this point, yes.
Okay.
I think what we've got dollar weakness in play, and I think what we've seen, with the yields particularly easing as well, we're going to be in a fight for the rest of the year. Well, at least till the up and over the next FOMC meeting and everyone, central banks, they're not going to let this go too easily. So it was one of the main things I picked up going back over last week, just catching up. All the talking heads. We're not ready to cut. There may still be hikes in the pipe. They are not going to roll over. So I expect, if things stand the way they are right now, I expect very hawkish sounding central banks going into the end of the year. Next year, different kettle of fish, but they're not going to give up on the message and let the market take their pants down again.
When's the Fed? Early December?
18th, I think, off the top of my head, sometime like that.
Okay. All right. So plenty of time for the markets to do whatever they're going to do before the Fed. That's 3 weeks, right?
Yeah.
Good morning.
Exactly.
Good morning, Kman. Is it good to have your partner back?
Coach, good morning. Good morning, everybody. Of course, it's good to have Ryan back, and especially knowing that he's wrestled through it relatively swiftly this time.
Did you take antivirals, Ryan?
No, just
wrote it out.
paracetamol when it got a bit too much, and that was it. So I like to fight it out. I'm not a pill pusher.
Okay.
By the way, December the 13th is the FOMC, not the 18th.
Okay. So that's after this week, 2 weeks away after this week. All right.
Yeah.
Or 3 still. I don't have a calendar in front of me. So, Kay, what are you thinking coming into a holiday shortened week?
Yeah. As I said last week, we had this package move on the dollar, on the yen, on quite a few currencies, and as I said, it had a whiff of November 2022 action, and this week I think is going to be the week where either this confirms or that it was just one setback on the dollar. Yeah, yields are going to be very important, of course, as we have this early week bond issuance program. We are at quite interesting levels on the euro dollar. We are quite interesting levels on the cable, around 125, 5.5. The dollar yen is trying to keep below or enter the daily cloud as well, so that is interesting. And then it's going to be up to yields. And if the market goes to auction, let's put it that way, that is something I'm going to monitor, then we could actually already be at the start of the global year-end trade. That is that the people will likely at least not necessarily push yields much lower, but at least keep them a bit suppressed, and that may be pretty decent for risk and a bit perhaps for a weaker dollar. But I am not sold completely yet on the idea. I just want to see if we get confirmation of what we have seen over the past week. So I'm actually now positioned a little bit on the other side. I'm trying to play these levels on the euro dollar, the cable, and the dollar Swiss as well. So yeah.
What do you mean you're short some euro?
I sold a couple of euros. I'm going to watch what's happening. 109.40.60, cable 125 540, dollar Swiss around the 88.15.20. I have a level, and the cloud in the dollar yen comes in around 148.5. So we are close to all those levels. It could be that if the market is still a bit reluctant to go to auction at the start of the week, we could see a bit of a reversal, at least temporarily, to start the week in the dollar. So let's see.
Would you be a seller on a pop back towards 150?
Right now, I would, but I will equally be mindful if we are at the start of a November 22 move, where data elsewhere. And in those days, and I've already repeatedly said it, it was the start of the decline of the U.S. inflation. If we are in the same kind of situation right now, being November again as well, yeah, I think the pops are going to find sellers, and there's a lot of room as well to correct. not only on dollar yen, but if you look at all those yen crosses, right? I mean, they are, the yen trade weighted index is still well below where it was November last year. So there's a lot of room, even just for the short yens on the medium term short yen to take profits and correct. So yes, but I want to see what the dollar globally is doing as well. I'm actually my 150.5 put expires today, and I've covered it. I did cover it. I'm not keeping a piece of it open right now, but I am going to pay close attention what happens if we get back up there around 150 already for a starter.
Okay, Rushil P, one of our attendees, is asking for views on Aussie yen.
It's going to be one trade, I reckon. Dollar yen and yen crosses. They're all correcting. Look at Canada yen. Look at Euro yen is actually on a pretty interesting level as well, because that was a trend line break right around here. And all those yen crosses are on levels where if there's more coverage of short yen positions, they could all go for a little bit of a ride to the downside as well. Yeah, sterling yen is a bit of an awkward one.
You know,
but
sterling, to me, just chart wise, sterling looks weaker than euro.
Yeah, it does. It is. It still is. Absolutely. So sterling yen, yes. But we have to note also, and we have to know that sterling can get a little bit volatile. So I wouldn't start to sell it here in the hole, but wait perhaps for a return to, if we see it around 186 or so, if you want to play that one.
Okay.
Yeah. But still, I'm still very cautious to be long yen myself for a longer period, because if you look at the JGB yield, it's nowhere near 1%. You know, it's only trading at 75 BPs as well. So those yields came off with the rest of the yields as well. So I'm still not one to be long yen for long. Let's put it that way. But
Okay.
in the correction, yeah, why not?
Where should I look to buy silver?
We are at one level here, but I am not going to touch it yet. I wait to see what's going to happen around 23, the big figure, and then anything below there. You know, 23 down to 22.25, something like that.
Okay.
Right, gold, I'm not touching it.
Okay. And yuan, wow.
That's what I said.
That's nice.
That's one I really missed because I spoke about it a couple of times, and I was too conservative, waiting for too long, and yeah.
You know how many times I've waited for one more jiggle?
Yeah, exactly.
then,
732, 33 would have been ideal, but we never got it.
Yeah.
The double top completes just a little bit lower, about 711.
Yeah,
I just wanted to.
That's where there's a lot of moving averages as well, I think.
I just wanted to show people why Xi came to San Francisco. Okay, so there's the F.A.C.E. There's BABA. Their market definitely does not have the same kind of upside momentum that ours does. So that's why he was here, just in case you wanted to know. So I think this was on his...
Which makes it strange why the yuan is so strong. I don't think they're out the woods. They may have hit the bottom, but I still don't think they're quite out the woods. I think a lot of that dollar China move is obviously the US side unwinding.
Okay.
Yeah, but I don't think they're out the woods just yet. Those guys over there.
Okay, well that's good news. I don't really root for them. Okay. I root for you guys, but not for them. Rachel is saying there's big news on Aussie tonight and tomorrow. What is it?
RBA meeting minutes. It's
Okay.
it's just their meeting minutes. And Michelle Bullocks, she speaks a little bit later. Well, actually tomorrow morning.
Michelle Buttocks?
Buttocks. Michelle's buttocks spelled.
Okay, all right.
Michelle Bullocks.
Sandra Bullock's sister or cousin.
But she is talking about she's going to be on a panel discussing like I mean the title, let me look at the title of the discussion is State of the Economy. So obviously this is, you know, good. She's going to be talking about monetary policy.
Okay, I want to just show one stock that really.
How about Microsoft, man? With Sam Altman like being booted. That's a big deal. Big deal.
That it got hit pretty hard. What I don't like about AMD is it's a semiconductor. Semiconductors made new highs last week. It topped a month before the S&P top. Yeah, a little over a month because it was the end of July. We're a little bit above 61.8 here, and this could just be another failing rally. And if we get, you know, something with a quality, it could be a big break. Here's your Microsoft, Blake. That has a little better RSI picture, but you know, why can't it pull back to 350 or even 340?
It was down earlier, and then I haven't caught up since I just got up like you. I'm gonna catch up on some of this news. You know, he was removed from Chat GTP, whatever it is.
Oh,
and as CEO, but then he's, I guess, got hired on to do some other project. I don't know. I have to go and look, but it's, you know, the AI, the race to AI is kind of like the space race of the, you know, of the when was the space race? Like, well, I mean, of the
60s,
60s, 50s, and it's going to be very similar, except this time I think there's, you know, the consequences are much bigger, you know. So yeah, it's going to be interesting.
Amazon diverging at new highs on multiple time frames. It had a gap last week that it filled, which is, you know, saying there's exhaustion. I think it can make a marginal new high. Doesn't look great to me. And then, Blake, when are NVIDIA earnings?
Tuesday, tomorrow after the close.
Okay, NVIDIA is not confirming the high up here either. Although we haven't made a new high, it's 500, I believe, and we have 502, and we've only gotten to 99.60. So we take this out. I'm not sure it's going to confirm. And really, that's going to set the tone. But, you know, super semiconductor, Intel looks okay, but SMH is making new highs without AMD. So I'm going to buy some puts in AMD on the opening.
Boo, look at you. Go, Dale, go.
Hey, so take it over, buddy.
Yeah, sure thing. You know, first of all, I want to say, you know, welcome back, Ryan. Nice to have you back. I know you, I mean, you're going through COVID or any type of sickness, you know, for that matter, is no fun. So, glad to have you back, buddy.
Cheers.
All right. So, you know, this week we do have a lot going on this week, but we did have that question about the Aussie yen, and it was one of the pairs that I talked about for one of the setups going into next week on the week ahead video. So, you know, on the week ahead video, just let everybody know, if you're not listening to it, I do like the best setups of the, you know, the week, and then I cover the ones from the previous week. So it just, and it's at the end of the video, so you don't have to listen to the whole video if you don't want to. You just, you know, fast forward to the very end. But the reason why I want to talk about the Aussie yen is because we are once again back up against this multi-decade trend line. I know Kman covered the yen a little bit. I actually, Kman, you're not going to stay long yen, is what you said, right? Is that correct?
Not for long. That's
not for long. Okay, yeah, I'm short some dollar yen, and I'm short from last week up here near 150. I closed out half of it this morning. I'm going to reshort some on a rally, but I'm trying to position myself a little bit right now, but I know it'll just eat you up if it's not moving in your direction. So I totally get what you're saying, but I'm going to try to establish more of a position here. But I like some of these yen failures that we've seen. The Aussie yen, obviously the multi-year trend line. Whoops, not the Mex yen. The Canadian yen. I said Canadian yen. The Kiwi yen. Sorry, big failure up here. A lot of dark cloud cover. A lot of big reversal candles at the very end of last week. So I think that you got to pay attention to those if you're out, trading around those. One of the other developments that I think you guys should be noticing is the dollar Swiss, and this is something that I know Benedict in our chat room and Kman, you were talking about the same thing, but I'm gonna actually use a chart that I don't normally use so I can draw on it. And let's do this here. And let me delete these lines. So, Benedict was looking at this, Kman was kind of viewing this, and now we made the actual rejection today at the 127% extension. And we were just talking about this in the ForexAnalytix chat room, but I'm going to give you guys a little bit of a freebie here for those of you that are not in the ForexAnalytix chat room. This you can see this 127% extension is stopped right here, and you can go over here and read about it too. Let's see. We were looking for this rejection last week, and I have to pull up the dollar Swiss wherever I have it at. I'll find it. Where in the heck did I place it? That's the question. Oh, there it is. So you can see the 127% extension really just, hit. And now you got to be looking for a potential reversal there. And we could set up for a longer term inverted head and shoulder pattern if the dollar strengthens. But I have to say, if there's a lot happening this week. And I think the big deal, the big news of the week is actually going to be happening around Thanksgiving, because we do have the Eurozone UK PMIs that are happening on Thursday, when we're, here in the US, we're going to be celebrating Thanksgiving, not meaning the rest of the world is, because, there is still going to be economic data being released, especially, the PMIs. But on Friday, we're going to have US PMIs. So I think it's going to be really interesting, because the big story over, a lot of 2023 was the US exceptionalism story. And that's what, that's just, the US data doing better than everybody else. So it's going to be really interesting to see if we get that with the PMIs this week. Ryan, Kman, do you guys have any sense of the PMIs that are coming out this week and how you're feeling about them?
No real feeling. We might see a little bit of a pickup in Germany. We saw some optimism via the last zoo report. Whether that translates into actual boots on the ground improvement, we'll have to wait and see. I'm not expecting any fireworks from anyone. There's no reason to say activity's suddenly rebounded unless there's a big retail period coming up or something like services sees a big pickup. No fireworks expected, but we'll see if any appear.
Yeah, because the German PMIs are obviously still well below 50. They and as you pointed out, they have recovered a little bit over the last reading, but still pretty paltry. How about you, Kman? Any thoughts here as we go into those PMIs?
Yeah, same thing. I don't expect them to produce any fireworks, but we know how it goes. If the market is in that mood of saying like, oh, Europe, perhaps we've seen the worst, PMIs can still come out well below 50, but if they overshoot just a little bit on expectations, market may be buying a few more euros, whether it be versus the dollar or on the process side. It may just be still part of that theme, a bit like in China, where people say like, oh, the worst may be over. People's Bank of China, one won that battle against the markets. Perhaps, yeah, in the Eurozone as well. But I'm still not a huge fan of Euro. I see what happens on the crosses, but globally speaking, it's relatively walking in the same speed of the dollar of the US as well. So I'm not seeing too many big fireworks out of those PMIs. I think for me, really, I'm going to start the week by monitoring those bond issuances, and then we'll see.
Yeah, speaking of bonds, today we have a 20-year auction, which could be a market mover. You know, we have it is at, let me see, I think it's at 11:30 Eastern. Let me make sure of that. Where in the hell? Here it is.
What are they selling today, Blake? 10 years or
20-year, and it's at
okay.
They're selling 3 and 6 months bills, and then at
3 and 6
1
month,
p.m.
yeah.
Eastern time, 1 p.m.
Yep.
Eastern time, I think it's the 20-year bond auction.
Correct.
That's
So
interesting
just
because TLT is a 20-year instrument.
is TLT, is that what it
yeah,
is?
Yeah,
I thought it was a 10-year and then
Yep.
Jim Welsh was like, no, it's and I can't remember if he said whatever it was, but it's a 20-year, is it? Okay.
Well,
So
fact
TLT.
check me with Jim Welsh. You know, I trust his judgment. He's even older than me.
he is
having a hip replacement.
He is. Yeah, that's why we had to do a show with him a little bit earlier this week because he was getting his hip replaced. But he did. And
they have to give up his dancing career, so subscribe to his newsletter.
He said, I told him to have his wife up his dosage of his meds, and I think she's agreed. So anyway, TLT, like you know, we might get a little bit of move here.
And if you put TLT up, it looks like we've completed the first wave up. So maybe we're going to get, maybe that auction's not going to go so great, and we get a pullback in TLT and
be
a pop
interesting.
in the 10-year. So
that is something that we are definitely looking forward to today. And speaking of what, today is going to be fairly light. We do have Bailey speaking here a little bit later today, and he's speaking at the Henry Plum Memorial Lecture. What, are we expecting anything out of that, guys?
No.
Well, you know, Blake, I have Bailey speaking today too. I put some in my coffee.
But tomorrow go ahead, Ryan.
A few times. I think he's got a Treasury committee thing he's appearing at as well, and then we've got the Chancellor doing his mini budget, his autumn statement. Again, that shouldn't be any fireworks.
That's tomorrow morning, right?
Yeah, it might be a bit of moves for stocks if there's some decent corporate tax cuts. But I'm not expecting any big fireworks from that. It's all going to be about the election. So suddenly he's found a late bloom on the magic money tree this autumn. And now he's got some tax cuts to throw at people. But as I said on the Flow Show this morning, it wouldn't matter if he offered everyone a gold bar by the end of this week. His party is, I think, doomed at the next election.
What do you guys think about what happened in Argentina? I mean, people are making a big deal about it. Any comment? Okay.
What I read, and let me see if I can go back to my notes here. So there's a far right candidate.
Oh, far right. Yeah.
They won by a significant margin. So you know, I mean, I don't know if it's gonna. I wish we could trade the the ARS. So I mean, that would be awesome, right?
That'd be awesome.
Look at that thing.
Okay, so Kay is saying he's going to stop using the dollar. Is he going to use Bitcoin, Kay? Are they going to go the way of, I believe it's Nicaragua?
That got a shot up Bitcoin on that result because of that.
Oh, Bitcoin did shoot up on that?
Yeah, I believe so. Okay. First thing when that news started dropping in.
Yeah, interesting. Well, Anyway, hey guys, I want to say that I think it's going to be a pretty exciting week this week. And I know today might be a little slow, but the next couple of days we have Canadian CPI that we're going to be covering here tomorrow. And by the way, if you look at the dollar CAD's in a nice consolidation. So I think there's room for a breakout this week in the dollar CAD. So we've got that. We got some home sales data. We got weekly unemployment claims. A lot of stuff happened on Wednesday, University of Michigan consumer sentiment. And then we have PMIs. Dale, I know you're not going to be here on Friday, but I think I'm going to be getting up to do this broadcast. And the reason why is because we will have US flash PMIs, later on in the morning on Friday. So I'll be up, and I think I'm going to broadcast. Dale, you're more than welcome to join, but I would.
Okay. Well, I'm going to be in Palm Desert. I'm not bringing my laptop.
All right, cool, man. All right. Well, it sounds good. So Ryan, welcome back. Kman, thanks for your input today. And Dale, always glad to have you here, and thanks for guiding us today. I know you have Carly here to visit us, so
Yes.
need to pass
Carly, Jim Cramer's favorite technical person. Carly, he features a lot of her work. Carly's a great technician, and I'm looking forward to seeing what she has on the menu today. Welcome back, Carly. Thank you, team.
Thanks, Coach.
Cheers,
Thanks,
mate.
team. Glad you're back, Ryan. You're feeling good.
Thanks, mate.
And K-Man, thanks for who you are. Carly Gardner, say hello.
Thanks, Dale. Good to be here. Good morning.
All right. Good morning, Carly.
Good morning.
Excellent to have you back. And I always look forward to, what you're looking at and how you're executing strategies through the option market. What's on the docket today, Carly?
Well, we're gonna probably start with Treasuries since you guys were just discussing that. So let me just share my screen here.
I say on the docket because everyone's on trial nowadays. So,
Right.
As traders, we're on trial every day.
You have a point.
Yeah.
Okay, can we see my screen, my quote board? Okay, perfect. All right, so I'm a futures broker, so I do look at TLT for charting purposes. A lot of times I look at it simply because the TLT version is a little smoother than the futures version, because in futures, when the futures expire, they create continuous charts, and sometimes those get a little messy. But this time around, we're going to look at the 10-year note futures chart, so it's a little bit different. And this is what we've been looking at here for the last several months. And it's been a pretty wild ride. A lot of people were, a lot of the bulls were really disheartened by this double dip here. We bottomed last October, and then we rallied and came back down and tried to put in another bottom. But that's actually kind of normal in treasuries. If you look back here, this is how it happened in 2018 and when it bottomed out in 2013. So if you're looking at a very long-term scale, that's actually kind of the normal mode of operation. Even down in 2005, we saw something like that.
Yeah, because you see, Carly, in 22, the RSI confirmed, and markets rarely bottom on the confirmation. Then when we made a new low, not confirming. And Ellioticians, and I'm not one, were saying this decline was 5. So I don't know if 5 is over. I think it is, but
I think it is as well.
Yeah, 5 means finishing.
And
something new to begin, right?
Right. I'm not an Elliott wave theorist either, but yeah, I'll say yes. I would tend to agree with that. I believe treasuries have bottomed. I mean, it was ugly, and the capitulation was a little more dramatic than I was hoping it would be, but I think that's exactly what that was. And I know that this isn't on anybody's bingo card, but the reality is 2% 10-year note is not impossible. These are the kinds of things that we've seen in treasuries before. We've seen really miraculous switchback rallies. Like, this is a trading range that dates back to, you can see 2012, and you can just see how massive these moves are. It's hard to picture it today, but 2% is not impossible. In fact, I think if we break up above this trend line, which is like 111 in the futures, somewhere in that ballpark, I think that's probably going to push us into the 120s eventually. This isn't going to happen in a week or two. This is going to be several
By the
months.
spring, maybe.
Yeah. Maybe. I mean, anything's possible. If something really, treasuries move really quick when they do move. So it's not impossible, but that's on our card. So that's what we're looking at in treasuries.
I like it because
Mhm.
after this decline and rate hike, it's most of the market's going to be selling every rally. Okay, because there's going to be recency bias about the worst decline in treasuries in history.
Right. Yeah.
So yeah, nice look.
People aren't going to forget about that quickly.
No,
You're correct.
they're scarred.
Yeah, they are, and I trust me. I've been buying all the way down, so I've been feeling some pain myself. But
I hear the regional banks are now hedged at the bottom.
Yeah, that's yeah. I feel like they're going to regret some of that. I think there was some really, really heavy overhedging, which is ironic. I mean, I work with some hedging customers, and I talk to hedgers all the time, and the mentality is generally the opposite of what it should be. People don't want to hedge when they can. They want to hedge when they have to, and that's just the wrong mindset. The only other thing I'll say about this is also people don't generally follow seasonals in treasuries, but the seasonal bottom in treasuries is usually October, and that's exactly what we've seen thus far. So there's a lot of tailwinds behind any potential.
So how do you trade it with options with bull spreads,
right?
Risk reversals? How do you do it?
So we had kind of been advising our clients to do risk reversals and like bull call spreads with naked puts to pay for it. We've kind of cleared everything out though and gotten we've suggested everyone get flat. Some people listen, some don't, and that's fine if they don't. So we're actually on the sidelines right now, just hoping for another dip or some other opportunity. The options are honestly, I don't really trust markets at all going into the holidays, and so we're just trying to keep really, really light. Every year around Thanksgiving and Christmas, there's always one or two markets that go rogue and just ruin everybody's holiday. And we're trying not to be in whatever market that's going to happen to. We don't want to be there. So we're playing really light. So right now, if you want to make sure you have the upside on without ruining your holiday, I'd say just buy cheap 10-year note calls to make sure you've got a foot in the door, and then we can worry about it when things are a little more liquid.
What was that expression you used again, Carly? That people don't hedge when they should and then hedge when they have to.
Right. Correct.
Okay. I like that.
Yeah.
You think maybe that's a possibility in S&Ps here?
Yeah, absolutely. I think that is. Let me
I'm not spying on you. I'm just taking a guess that were you going to talk? Were you going to talk about S&Ps?
Do it. I was. Yeah, we had this is a chart that we used for Mad Money not too long ago, maybe a week or so ago, maybe a week and a half. Let me see if I can scrunch it into this screen here. Okay, so this is a monthly chart of the E-mini S&P 500 futures. And this is kind of our take on it. You can see that we're in this back in 2009 when the market bottomed, March of 2009. We've been in this big wedge. We went outside of it a couple times. This was COVID meltdown. This was the COVID stimulus rally. So we've gone out of bounds a few times, but we should be mostly staying in this range. This was kind of a pull forward of earnings, pull forward of gains, let's say, in this particular period here. Probably shouldn't have happened, but it did. But now we've come back into this normal range, and then we're now not back above it. This is super bullish in my eyes, and so this kind of defines the range. So I think the new range is probably going to be, the new top of the range is going to be somewhere around 5,100. And that line dates all the way, we're talking all the way back to like the year 2000 to get this trend line. So this is a really long-term projection, but to be fair, I don't have the chart prepared, or I do, and I'm not sure I can pull it up that quickly, but we've done some, and I'm not a big Fibonacci person, but if you do a Fibonacci projection from like basically this giant rally here, it basically puts us at 5,100 there. So I think 5,100 is something that is possible. It's not, again,
Yeah.
not going to happen in a couple weeks. Let me see if I can find
Well,
chart
that would cement everyone's
daily chart.
bullishness. That's for sure. Okay.
Yeah. I think I have a weekly chart that's a little bit more fine-tuned. There we go. So it's the same idea. You see, we overshot. This is pulling forward gains, but this chart's going to show us like in a shorter time frame, the target's about 47.30, and I think we could see that by the end of the year.
Okay.
So that'll be interesting.
Good.
Yeah.
How about you have a view on the dollar? Was that a significant top at 107.20? We're trying to hold here around 103.5.
I believe that was the top, yes. So it was a little bit messy, right? I mean, this was a little messy, and to be honest, I originally had my line drawn a little lower, but sometimes markets overshoot things, and this looks like we've probably seen the top. I'm looking for 100 to 99 on the bottom. If we break below 100, honestly, that puts us into like what I call normalization territory and everything. Like it's basically wiping out all the chaos that went on in the last 3 years or whatever with COVID and then the reaction to COVID and all that kind of stuff. And it gets us back into a normal currency market that would probably put the dollar in the low 90s. And that alone would be bullish for most assets. I mean, just
for the
lower for the world, for everything. It'd be a good news for everybody. So for most people.
Yeah, hard to be short anything when the dollar.
Right.
Do you believe, Carly, if you get the dollar right, you could get everything else right?
I believe that yes, I do. I mean, it's not as easy. Some people think this stuff's going to be as easy as the dollar's down today, so gold has to be up today. It doesn't work like that. But in the long run, after all the ebbs and flows, it does kind of work like that. Maybe not gold specifically. I just threw that out there, but most assets.
I love your charts. You know why? Because they're clean and you simplify things for people that may not be, master technicians, and really make things visible and give targets and potential targets. Really nice work, Carly. I know why Jim.
Thank you.
I know why Jim uses your work. It's really,
Thank you.
Very
well,
nice.
I appreciate that. I do appreciate it. I do think that some people tend to, humans in general tend to make things way more complicated than it needs to be. I find I can make better decisions on really bare, simple trend lines than all the other fancy stuff. But I mean, to each their own.
Yes. Okay. Yeah. Know thyself.
Yes.
What else did you bring for us?
You want to take a look at crude oil?
Yeah, that's interesting.
Okay, we're gonna do monthly and then we'll go to a weekly after we take a peek at this. So this is a chart I've probably shown on your show here multiple times, but the idea is if we didn't have COVID, which is this big down bar here, and all the shenanigans that went after COVID, like in 2022, and the war broke out, we probably wouldn't have seen this spike here. We should generally keep prices below. This line in the middle is what I call the fracking line. And so after fracking, we have not been able to stay above this line. This is when fracking basically became mainstream, is right here. And you can see prices just collapsed. Yeah. And then with fracking, as long as the government doesn't get too much in the way. And I know there's a lot of political banter about the U.S. not being able to produce oil because of all these government things. And that's that I will admit that is partly true. There's a lot of things holding them back, but U.S. producers are also being held back by just the fact that they've learned their lesson between these two big sell-offs, and they don't want to flood the market again, which will probably happen anyway. But the reality is the U.S. is producing more crude now than they ever have, even with a lot fewer wells and rigs. So we're still producing at a very high level, and there's just no reason for oil to be above $100 a barrel in my view. But I also look at this chart and I see somewhere in the 67, 68 range, there's this really long-term trend line.
Yeah.
We actually a month or so ago, we were out on a couple of the news stations, TV stations, talking about how $70 oil is a possibility, and people got really upset at us because the idea of lower oil while there's a war on and all this stuff going on just
Oh,
didn't
yeah.
sit well with people. But here we are, and our original call was for 72, but to be honest, we sold off so sharply the last couple of weeks with so much volatility. I believe there's probably going to be a margin call event that pushes us down into this number right here. That's around the high 60s. I mean, again, I'll mention it one more time. Holiday markets cannot be trusted. I can't remember exactly what year it was, maybe 2016, something like that. There was a OPEC meeting right on Thanksgiving Day. And I remember catching a flight to Chicago. And there was internet on planes, but it didn't really work. So I got on the plane in Chicago. Oil was down like $3 or $4 on the day. By the time I landed, it was down like $9 or $10. And this is like a Thanksgiving Day abbreviated session, which shouldn't even have been open. So you can
like
see
this
some
Friday,
right.
Friday, and we have data this Friday.
Yeah. So there's just the door is open for chaos in during the holidays. And so I wouldn't be shocked to see crude oil just continue to slide as everybody gets squeezed out and margin calls hit and those sorts of things. Let me see if I can look.
How about then just, day trading until New Year's, or standing aside until everyone gets back and sobers up from the holidays?
I think I'm a fan of standing aside, to be honest, because I think it's so much harder to do to be on the right side of things. Markets just do silly things during the holidays. So I tend to encourage people to stay on the sidelines. I've ruined my Thanksgiving and Christmas a couple of times, and I don't want anyone else to ever do that. Or you can just buy, like I said in the Treasury notes, just buy some cheap options if you really need to be in there. That way, if they expire worthless, it's not going to ruin your holiday. But if they pay off, that's fine too.
So let me ask you a question. And we go through this holidays. When there aren't holidays, there are things that could ruin your summer vacation, or there's always something. What kind of self-talk, since it's happened to you a few times and you knew that it wasn't a good event, and yet it still is Thanksgiving, how were you able to set it aside and enjoy the holiday, or you just weren't able to, which is understandable?
To be honest, I just wasn't able to. I mean, I tried, I went through the motions, but I wasn't enjoying myself. And part of it is, I mean, as in my line of work as a broker, there's a lot of things going on. So there's money being lost, but there's also a risk management. Yeah, customers' money, and nobody wants to see that. No one wants to talk to customers when that's going on. But also there's a risk management aspect of it. Like the markets are partially closed for a couple of days and partially open. And they're like all of our customers, not all of them, some of our customers are using a lot of leverage. And so sometimes it's hard to manage not only the risk of the money they have in their account, but losing more than they have in their account because they had too big of a position on and things like that. And
deficits.
during the right. And you see during the holidays, you see big gaps up and down sometimes just because the liquidity's sparse. So it's just not, like I said, been there, done that. I've learned not to do that ever again. So
are the grains finally going to put in a turn here? It looks like beans already have. I think
they are. This is I'm going to pull up corn first because this is the easiest chart to look at. I'm going to delete that. So we actually have been suggesting our clients buy cheap calls in March and July, 550 strike, just to be there in case something happens. But we're not bullish corn yet. Seasonally, we generally get like a bottom in October, and then it rallies, kind of like what we've seen. I'll get that out of the way. It's just and then we usually dip down in December. My take is we've been holding this trend line very well. In fact, better than I thought we would. I thought for sure we'd break through on this attempt because the more a market knocks on a door, the more likely it is to open. And then usually when it opens and it's something that's held this nicely for so long, it's usually kind of disastrous.
I think overthrow. Yeah.
Yeah, I really think that's going to happen. In fact, I think that's probably going to happen by the end of the year at some point during all the holiday thin trading. I think we see corn all the way down in the 340s.
Wow.
So we're talking a big flush out, and I would be bullish there. So if it gets there,
One
we'd
more
be willing to
flush.
be, yeah, we'd be willing to be pretty aggressive from those levels. But from here, I think it's worth just limited risk, long calls to see what happens. I've spoken to a lot of farmers, and I mean, it's a small sample size, but my feeling is most of them were severely underhedged, and very few of them that I've spoken to managed to sell anything, contract anything out at these high prices. And so you can
Yeah.
imagine, I mean, they're humans and they know, well, I could have sold earlier in the year, I could have sold my crop at $6, and now I'm looking at 460, 470, and they just keep holding on, hoping for something better. But when they're hoping like that, it's just a recipe for a big flush out, because eventually what's going to happen is they're all going to be forced to sell to raise cash for next year's operations or to meet loans, and we're going to get that big dip. So it's not going to be
Yeah.
pleasant, but probably going to happen.
Lake Morrow says, I don't live in woulda, coulda, shoulda land.
Right.
And
And you
you
have
know, a
to be
lot
like
of us,
that. Yeah,
there's
it's
actually a
hard.
song, I forgot who did it, Marvin Gaye or someone did it. Okay, so there's,
So this is soybeans. Yeah.
yeah,
I
better.
believe soybeans is a little more constructive as long as beans hold. This is the 200-day moving average. It's about 1323. And then
Yeah.
there's a trend line at about 1311. As long as those areas hold, beans are looking pretty good. I worry about beans though. There's the sentiment seems to be overly bullish, and prices are pretty high. Like people kind of think of $13 beans as cheap because of where we've been the last couple of years. But if you look
Yeah.
at, in the long run,
It's
we're
not
actually
cheap.
it's not cheap. It's actually kind of expensive.
I
So
remember
I'm,
$5 beans.
yeah. So I'm not in any hurry to touch beans. I'd prefer, as a speculator, not someone, not a farmer friend. I would, I would prefer
Yeah.
to see a big flush out in beans so we can get long somewhere down in the 12s. But we'll see. We'll just have to see what happens. I wouldn't force it though.
And wheat, which was affected by the war, but
Yeah.
hasn't,
Oh
it's been
man.
trying to bottom for a long time. Still not
Yeah.
there, are we?
It's hard to say.
Yeah.
We've struggled with this for a little while. I think that we're putting in a bottom.
Yeah.
But I mean, again, don't trust holiday markets. You don't want to be too aggressive down here. And the reality is, it just can't get off the mat. Every single rally is sold into, and the speculators have gotten in the habit of selling rallies. And it's going to take. I mean, it's hard. That trend is hard to change. So, um, yeah, maybe
Okay.
cheap calls there as well as the way to do it. But believe it or not, even though the market's been struggling the way it is, you can see on this chart, it's just like a death spiral. The
Yeah.
call options are still pretty expensive, and they haven't lost all their premium from the chaos that went on a couple years ago. So not an easy market to trade right now for sure.
Well, you brought a lot to the table today, like
Thank
usual,
you.
Carly.
Well, thank you.
Appreciate it. Best way for people to follow you and maybe open an account and trade with you?
You can follow me on Twitter. It's Carly Garner is the handle, at Carly Garner, and this is our website, decarlytrading.com. Again, we are a brokerage service, so we offer everything from full service to discount online trading. We're a boutique shop, so we answer our phones and our emails, and we have experienced service providers, unlike some of the other shops. But even if you don't want to trade with us, you can go to our website and sign up for free newsletter trials, or go through some of our educational material. We have quite a bit of educational material here, so take a look if you're interested. Thank you.
Yeah, so educate yourself and consider Carly for your intelligence gathering. And Carly, I want to wish you and your family a great Thanksgiving holiday season. I really appreciate getting to know you and your work over the years, and we'll get back together with you this winter.
Perfect.
And
Let's do that.
really, thank you, my trading warrior sister.
Yes, thank you for having me. I appreciate it. It's been a pleasure. Thank you.
Carly Gardner, everyone. Check her out. I love her work. I got some pearls today from Carly. Enough to string a necklace. Thanks, Carly. Remember, everyone, don't just count your pips, count your blessings. Could join the team in 18 minutes on the morning edge. Good hunting the rest of the day. See everyone for Turnaround Tuesday. You're very welcome, everyone. Adios.